Hello traders and welcome to OctaFX YouTube channel. So before begin, I would like to invite you to subscribe on our YouTube channel, like this video, and you may also share it with your friends. Alright, so today we are going to talk about the 5 most common mistakes of newbie traders and how to avoid them. And so there's a saying or there's a belief that goes like only 10% of traders are the ones who actually surviving or thriving in this market or in this industry. So the rest, the 90% rest who are failing in this trading or in this industry doesn't mean that they don't know how to trade properly. It doesn't mean that they don't know a secret magical formula in technical analysis, but simply because they aren't aware on what they're doing. So because of unawareness, they tend to commit these 5 most mistakes that the newbie traders are committing. And the first reason on why most newbie traders is because number one is because they are investing too much funds on a single trade. So this is the first reason they are investing too much fund on a single trade. So imagine if you are risking 50% of your account on a single trade. Let me just fix my tools. Bear with me. Alright, so this is better. Alright, so imagine if you are risking 50% of your account, then you lose 2 trades in a row. Then that means you will already lose 100% of your account, it simply means that you will already blew your account. All right. So as much as we want to say that we want to have a multiple winning streak, but in trading that's not the case, right? We all know that in trading we can expect a random result, like we can win let's say two wins straight. Then after that we can expect to lose, or we can experience losing 3 straight in a row. Then after the 3 losing streak, we can then again win, then loss, a win again, and another losing streak may occur, right? So imagine if you are risking 50% per trade, then unfortunately you caught this losing streak before before having a winning streak. Unfortunately, your first 2 trades are losses. Then that means you will already be lose your account, or you will already blew your account, right? So investing too much fund in a single trade is not a good practice or not a good habit in trading. So uh, I have heard about this story before about the Alright, so we will start in about 3 minutes. Let's just wait for more people. So hello to Jonathan Wanis, to Ferdinand Godson, Bon Chidek. So we will start in 2 minutes because our original live stream is scheduled at 7 p.m. So hello to Dante Sandoval. Good evening to Mary Rose Rosario, to Mels Loria. Good evening as well. Hello. And shout out to Chicornel Israel. Alright, so we are about to begin. Alright, so again, I would like to introduce myself. My name is Paul Joseph Mendoza, and you can call me Paul Mendoza, just to make it short. So again, welcome to OctaFX YouTube channel. I would like to invite you again to please subscribe on our YouTube channel, like this video, and you can also share it with your friends. Alright, so today we are going to talk about the 5 most common mistakes of newbie traders and how to avoid them. Alright, so to share my experience, I experienced losing all of my accounts in just 2 days of my trading when I first started, and I don't want you to experience it yourself, and that's why we are going to talk about this topic right now. So there's a belief, or there's a saying that goes that only 10% of traders are actually thriving in this market or in this industry, right? So for the rest 90% who are failing, that doesn't mean that they don't know how to trade, or they don't know, yes, they don't know how to trade at first, but the most reason I believe is it's because they are unaware of what they are doing, and because of unawareness they tend to commit these 5 deadly most common mistakes. And the first reason I believe is they are investing too much funds on a single trade. So there's a tendency for us newbie traders, especially me, when I first started, I am risking 10% of my overall account. So let's just say we have $100,000 account. So if you are risking 10%, or in my case, I experience risking 50% of my account. I know that that sounds ridiculous, that sounds insane, but that's how I did it before. And because of that, I experienced losing my entire account in just 2 days. So imagine the horror, the pain that I experienced before. So hopefully you will not commit the same mistake like how I did before, last 2018 when I started. So I experienced losing 2 straight in a row, and because of that, I already lose my account, or I already blew my account. So as much as we want to win multiple trades in a row, like a win and another win and another win and another win. So as much as we want to see this on our portfolio, it is not exactly the case on trading, right? Do you agree with that? If you agree, comment 1 or comment yes. So as we all know, trading will give us a random result, right? We can win, we can expect to win, of course. We can expect to win, let's say, 2 straight in a row, and then after the winning streak, we can expect, or the market will give us a losing streak. It will make us humble. The market will slap our face. We can experience losing 4 straight in a row, and I experienced this myself. Even today, I can say that I am an experienced trader today, but I'm still losing 4 straight in a row. So imagine if you are risking 50% of your account, and then you lose 2 straight in a row, then that means you will already be back to zero, right? You will already blew your account, right? So there, Dante Sandoval types yes or types 1. So I know how ridiculous it was to risk 50% of your account, but hopefully you will or you won't commit the same mistake just like how I did before. So I just want to tell you this story. I heard this story about a trader who is a profitable trader. He knows what he's doing and he knows his stuff. Even his friends are asking for advice for his analysis on what to do, on what to trade, and how to trade, whether they're going to buy or sell. And you know what? This trader is constantly losing his entire account because of his poor risk management and because he is risking or investing too much fund of his account. So let me show you this graphic right now. So here, as we can see, we have a win here, then a losing trade here, then as we can see, we have 2 straight losses here, then a win from time to time, right? Can you see it? So imagine if you are risking, let's say, 20% of your account for a single trade here, then unfortunately you suffer this 2 losing streak in a row, then that means you will already be negative 40% of your account. So if you have $100,000 in your portfolio, then that means you will already be down to 60,000, which is very painful to experience, right? So let's say you lost 50% of your account. If you lost 50%, then that means you need to gain 100% to be able to get back your losses. So you need to win 100% just to be back on break even, right? So let me show you this example right here. So let's say we have 2 traders and both of them are trading 100,000, let's say, for the sake of example, and trader A right here is risking 20% of his account on a single trade, while the trader B, let's say this trader knows how to manage his risk. Let's say this trader knows how to trade well because he is an experienced trader. So let's just say he's only risking 1% of his account. So here the trade, let's say in a hypothetical example or in an example event, unfortunately both of them lost their five first trades. All right. So as you can see here, if you are like the trader A who is risking 20% per a single trade, then you caught this 5 losing streak right here, then that means you will lose 100% on just your first trades, right? But if you are the type of the trader B who is only risking 1% per trade, then that means you will just lose 5% of your your account, right? So let's just say again, for the sake of example, they lost their first 5 trades. Then fortunately, after this losing streak, their next 5 trades right here is a winning streak. So unfortunately for the trader A, he won't experience this 5 winning streak because he already lost his account, right? But for the trader B, he will enjoy this 5 winning streak, and on top of that, he will gain 10% of his 5 winning streak right here, because let's say for every win, he is winning 2% per trade. So after this 5 winning streak, he will now be at positive 10%, and that will cover his losses, which is just 5%, and it will be a total of 5% return on his portfolio, right? So can you now see the importance of uh, risking just 1% of your account, or the risk management? Can you now see the importance of it? So as you can see, investing too much fund in a single trade is not a good practice, and you must avoid this at all costs, right? So if you are the type of trader who is investing too much fund in a single trade, the solution to this, or what you must do, is to practice risk management. Practice risk management and do not trade more than 1% of your account. All right? Because if you are just risking 1% per trade on your account, then that means you need to have a 100% losing streak to blow your account, which is very impossible, right? It is very impossible to lose 100 trades in a row, especially if you know what you are doing, right? So again, practice risk management. The solution for our first problem is to practice risk management and do not trade more than 1% of your account. All right, so I would like to end our first lesson with a quote that it says, if you don't invest in risk management, it doesn't matter what business you're in. It's a risky business. So whether you put up your own restaurant, whether you put up your own traditional business, but if you are not managing your risk, then it will be a very risky business. All right, so this is a quote from Coricon, and again, I want to end this first topic that we have today, to practice risk management and do not trade more than 1% of your account. All right, so for those who are watching, can you say, I will now risk only 1% of my account, or please comment 1%. All right, so moving on, let's now move on our second reason on why most new traders are failing. And I believe the second reason is because they are overtrading, or they are committing revenge trading. So revenge trading simply means that let's just say at first you only lose 1% of your account, and then because it is very painful to you, you treat your losses as a personal thing, then you will now start risking 2% for your next trade. And then unfortunately, you lost both these trades. Then what you will do again is to increase your risk, which is 3%. And then once you take another loss, you will again increase your risk to 4%. And without even realizing, you are now on the trap of overtrading, right? Because if you risk 1% of your account at first, of course, you will just be down negative 1%. And then on your next trade, you overtrade, you want to take your losses back. So that means, or the newbie traders has a tendency to increase their risk, then you risk 2%, and so on, and so on. And you might even realize that you are now committing the overtrading, right? So just because you want to take revenge on the market, you will now be on the trap of overtrading. So this is a bad habit. We must avoid it. We must avoid this at all costs. So I know this trader on YouTube. He is a stock trader. He is uh, he tried to invest on the FX market or the forex market. He tried venturing on the forex, and what he did is he didn't practice his risk management, and then on his first week, fortunately for him, he was able to gain 20% of his account. So this is a good, in theory, this is good, right? So shout out to Chana Della, hello as well to you. So in theory, this is a good return, a 20% return, right? But you know what happened on his second week? On his second week, he increased his losses, or he increased his risk, because he experienced winning on his first week, which is a 20% return from his portfolio. Then he became greedy, and then unfortunately he lost 10% at first on his second week. Then what he did is he began taking revenge on the market. He wants to make his losses back, and because of that, he tend to increase his risk. So he start risking 2%, then eventually he start risking 3%, and then he don't feel contented with just risking 3%. He risks up to 5% per trade on his account. And then unfortunately, what happened to him is on his third week, he lost his entire account. He is now again back to zero. So can you now see the pattern? The pattern is whenever you are taking revenge on the market, you are being trapped on the overtrading, or you are being trapped on wanting to make your losses back, and you are committing overtrading without even realizing it, right? So this is the importance of managing your risk. This is the importance of managing your account. So there's a saying that goes, you must take care of your losses, and your wins will take care of themselves, right? So this is a costly mistake. So we must avoid this at all costs. Overtrading and revenge trading is a bad habit, especially for those who are just starting on trading the forex market. So I myself is a victim of this. I experienced risking 20% of my account on a single trade. So risking 20%, then I lost 2 straight in a row, and then because of that, I already experienced losing 40% of my entire account, and because of that, I increased my risk. To 25% just to take back my losses, and that leads me to overtrading, right? So what's the solution to this? The solution to this is simply to avoid trading just to get back your losses here, and put a limit on our overall risk exposure, which leads to us opening just 5% of our entire account, right? So imagine if you have an open active trade right now. So let's say you have an active trade which is a 1% risk on your trade, and then you saw another opportunity to buy or sell, or anything. You saw a great opportunity for a single trade again, or for a trade. Then you open another trade which is again a 1% risk, and then you saw another opportunity again which is a good trend continuation trade, and then you again open a 1% risk, and then eventually or let's just say you now have an open 5 active trades. So that means you are now risking 5% of those active trades on the active trades that you got right now or that you have right now. That means you are now uh, on a 5% exposure, right? So whenever you are experiencing this one, you must now uh, put a limit on yourself to not risk more than 5% of your overall account, right? So let's just say you won all of these trades, then start trading for today and start trading again for tomorrow and do the same strategy. All right. So again, the solution is to avoid trading just to get back your losses. The market will do anything it wants to do. It is not entirely moving against you. Stop thinking that the market is against us, because I experienced it before. I started thinking that the market is against me. It is trading against my position. So that's my mistake. And for us to be profitable, we should avoid trading just to get back your losses and avoid trading that the market is against us. And also put a limit on your overall risk exposure. All right. On any given day, just risk 5% of your entire account. So if you have, let's say, three open active trades, you can open 2% on your first trade, and then you can again open 2% on your second trade, and on your last trade, you should only open for 1% risk. And this means that you will just have an overall risk exposure of 5% per day. All right, so please comment now 5% per day for us uh, to to know or to commit on our solution to deal with our second mistake, which is overtrading. All right, so can I see the 5% per day comment on our chat box? All right, so once again, the solution is to avoid trading just to get back your losses, put a limit on our overall risk exposure, and lastly, to limit your open position on just 5%. All right, so I want to end this second reason with this quote. So in trading, it is not how much you make, it is how much you don't lose. All right, so whether you win, let's say 10% in a day, and then you lost 15%, so it will cost you a negative 5% because you are not managing your losses, right? So again, manage your losses and your wins will take care of themselves. Okay, and the third reason on why most newbie traders are failing, it is because they don't want to lose. So this sounds absurd, right? Because if you don't want to lose on a single trade, you might better not trade at all, because in trading, losses are inevitable, right? So it's just like saying that you want to play basketball without even missing, right? So whoever playing basketball here, it is very likely that you will miss a shot, right? Can I see who are playing basketball here? Can you say type yes? Because I know you are able to understand, or you understand what I'm trying to say now. So imagine if you are again playing basketball without wanting to miss a shot. So that's not a good way to deal with your play, right? So let me show you this graphic right here. So can you see this one? Can you see the graphic right now? So as you can see here, Stephen Curry is known to be the greatest shooter of all time, right? He is the GOAT when it comes to shooting, right? He is the GOAT shooter, right? But uh, we can or we all know that he is only shooting 42.8% of his shooting rate, right? So that means out of 100 shots, he will just most likely to hit a shot of 42 shots, right? So in trading, it's just like playing basketball, or it's just like playing a chess. You might lose from time to time, and here in the case of our go shooter, who is Stephen Curry, he is only shooting 42.8 of his overall career. So as you can see here, it is bad to think like you don't want to lose, because losing is part of trading. That's why we need to manage our risk. We just we just or we should risk only 1% per trade, because losses are inevitable and it might cost you in the long term, right? Because let's just say you lost 10 straight in a row, which is very likely in trading, but this is just, let's say, on your first month, right? But in the span of 12 months, or in a span of 1 year, you will now then be able to assess your trade. Let's just say out of 100 trades, you won 60 and you lost 40. So this is not just luck, right? This is what we can call now a skill. So you have the skill on trading, you have the skill on how to read the market, and because of your skill, you were able to win 20%, right? So that's the importance of dealing with your losses, right? So again, we should manage our losses, because our wins will take care of themselves. All right, and because of not wanting to lose, newbie traders also has a tendency to commit system hopping. So system hopping simply means that whenever they have this specific whenever they have this specific trading strategy, let's say whenever they are trading an uptrend, and then they saw that this previous resistance may turn out to be our next support. So let's say they bought on the support level, and then the market went up, then they will feel happy, they will feel accomplished, and they will feel that they are smart because they won from this trade. And then again, they saw the same strategy, which is to trade a pullback, and then they won again. And then after the two winning streak, then they started losing. So let's say they bought on the support again, but unfortunately the market reversed. Then they will suffer now their first loss. And then here on this previous support that may turn into resistance, let's say they put a short sell position here, then the market stop their trading, or the market hit their stop loss, then they will suffer their second losing streak in a row. And then the market continue to drop, and then they again opened a short position here on this resistance zone, but the market decided to go up. Then they will now started thinking like this pullback strategy is not good. Then they will start finding a better strategy, or they will start committing to, or they will start changing their strategy, which is a pullback first. Then they will start trading the breakout. So let's say this previous resistance once broken, they will enter a buy trade here. Then let's say they won with their first trade, and then after that they again entered a breakout trade, and then they won again. And after the two winning streak, the market reversed, and then let's just say they opened a buy position here, but the price started reversing, and then the price make a continuation here. Then they start selling this market, then the price stop their trade, then they will now open another breakout trade here, but unfortunately they caught another loss. Then they will start again thinking that this strategy is not good. Then they will start trading on a random basis, like they will start putting some indicator or some magical formula, like putting RSI, putting MACD, or putting MAs, something like that, right? So because of not wanting to lose, they tend to change their strategy or their trading system from time to time, which is a bad habit, right? Because for every strategy that we have in trading, we can expect that there's a losing streak that is just waiting for us, right? So we can't avoid losing, because just like what I said, Stephen Curry is known as the greatest shooter of all time, but he is just hitting 42.8% of all his attempts, right? He he is shooting the same whenever he is open. His reflexes or his muscle control or his muscle memory is still the same, but he is just hitting 42.8 from his every attempts or from his attempts, right? So in trading, we can expect exactly the same. So as we can see here, the reality of trading is we will most likely win just 55% of all our trades right here, right? So most newbie traders are expecting to win 90% of all their trades, which is not a good expectation, because as we all know, trading is random, especially if you are aiming for a 2% to 2% reward. Let's just say on a single trade, you are aiming for a 2% reward while only risking 1%. So we can expect that we will most likely lose more than we could win, right? Because our winners or our target is far more than our stop loss, right? So let's just say for every trade, we are risking 10 pips. And then for our target, we are aiming for around 20 pips. So this strategy has a tendency to have a lower win rate, but as long as we manage our race, which is just 1% loss, our winners will take care of themselves, which is a 2% reward. So in long term, this is a good strategy, and we must avoid system hopping at all costs, right? And the second thing is they are treating their losses as something personal, just like what I said a while ago, right? And the last one here is they have unrealistic expectation. They expect to make 1 million a year, which in reality, if you are trading, then if you are making 5% a month, then this is more than enough for you, right? Because do you know that making 5% a month will give you a 79% per year? 79% per year, and 79% per year on your personal trading account is a very, very good return, especially if you are a consistently profitable trader, right? So again, the third reason on why most newbie traders are failing is because they don't want to lose. They are system hopping, they are treating their losses as something personal, and they set unrealistic expectation. So not wanting to lose is very, very not a very good attitude, or especially if you are newbie. So just manage your loss. Again, manage your loss, and your winners will take care of themselves. All right. So let me just end this one with this quote. Never ever argue with your trading system. So the solution is to think about your losses as cost of doing business and stick to your trading plan. So think about your losses as cost of doing business, like especially if you are opening a business. Let's say you have a traditional business, which is a restaurant. So in your restaurant business, you will be the last one or the last person that will be paid, right? Because at first you will pay the salary of your employee, and then after that you will pay the cost of your electricity, and then you will pay the cost of your rent of your restaurant business, and the overall the overall return from you, let's just say in one year, let's say in 1 year, you are able to gain 20% return from your business. So the pay from your employee, the pay from the electricity, and the rent for your from your location is the cost of you doing your restaurant business, right? So treat your trading just like a business, just like a professional business. Okay? So let's just say out of 100 trades, you won, let's say 60. You won 60 wins, and then you lost 40 trades. So that means you will win 60% while losing 40%, right? So treat this 40% as the cost of doing business. Okay? And in the end, you will have a net profit return of positive 20% from your overall account value. Okay? So again, don't ever think that you don't want to lose, because trading or losing is part of trading, and the solution to this one is to think about your losses as a cost of doing business and stick to your trading strategy, whether you experience losing, whether you experience winning multiple times in a row. Never ever argue with your trading system. Just stick with it and be disciplined enough to follow your trading system or your trading strategy. Alright, so this is a quote from Michael Covel. Okay, so that's the third reason on why most newbie traders are failing, and this is the solution to it. Okay? Yes, Jeremiah Mendoza said that it means even how good you are trading, you can still lose, and that is very true. Right? That's why we need to manage our losses, because our winners will take care of themselves. Alright, so for our fourth reason, I believe this is because they are not calculating their risk to reward ratio. So risk to reward ratio means that, let's say, whenever you are opening a trade, you are opening a 1% risk. So this is your risk, right? And let's just say your reward is a 2% return. All right. So whenever you are trading like this, it means that even if you lost for trades, let's say you lost 4 trades while only winning let's say 3. So in theory, this is not a good winning rate, right? Because winning 3 out of 7 trades will get you a low win rate, right? But in reality, winning 3% or winning 3 trades while winning 2% will give you a 6% return, right? While only losing 1% for your 4 trades, it will give you a negative 4%. So that means you will end up with a positive 2% reward, right? So because most newbie traders are not calculating their risk to reward ratio, they tend to commit trades like whenever, let's say, they caught a breakout right here, and then their trade or the price went on their favor. Let's say they are now up 0.5% right here. So their risk right here is a 1% risk. Then whenever they are up, they are thinking like, I don't want to lose, and I want to make this return, or I want to bag this profit right now that I'm in. So they tend to close their trade. So in theory, they will now have 0.5% of their account. And then again, they caught another trade. Let's just say this time they caught a pullback. And then whenever the price is going on their favor, they are closing their trade. So let's just say another 0.5% of their account was given to them. And then they will commit the same and the same mistake over and over again. So let's just say they have a 4 winning streak, which is a 0.5% right here. Then unfortunately, the losses came. So let's say, for example, they bought the breakout here. Then unfortunately, the market go against them. Then that means they will lose. And that loss is a 1% loss. And then again, the price made another continuation. So they caught the pullback. But unfortunately, the price went against their trade again. So that means they will again have another negative 1%. And they did this over and over again. And let's say they lost 3 straight. So in theory, winning 4 while only losing 3 is a good win rate, right? So you are winning 4 out of 7 trades is a good winning rate in theory, right? But in reality, whenever you are just winning 0.5% of your account, it will just give you a 2% return, while losing 3 straight in a row, which is a 1% risk, will give you a negative 3%, right? So in reality, this will end up on a negative 1% return. So can you now see the importance of the risk to reward ratio? So let me show you this illustration right here. So here, as you can see, this black line right here is our break-even point. So whenever you are taking a 1:1 risk to reward ratio right here, so 1:1 means that whenever you are risking 1%, you are also aiming for a 1% return or a 1% reward, right? So if you are doing or if you are taking a 1:1 risk to reward ratio, then that means you need a 50% win rate to have a break-even return. So 50% win rate for a 1:1 risk to reward ratio. While if you are, let's say, for every 1% return or risk rather, you are aiming for a total of 2% return, then this will just, or this one just needs to have a 35% win rate to have a break-even return, right? So 50% win rate for 1:1 risk to reward ratio, and for the 1:2 risk to reward ratio, we just need 35% win rate to have a break-even result, right? So imagine if you are just aiming for a 0.5% while risking 1% of your total account value, then you should have around 70%, right? So if you are risking 1% while just aiming for a 0.5 return, then that means you need to have a 70% win rate to just have a break-even result, right? So shout out to Mark Santiago and Mark Junicio. I hope you are learning a lot from our lesson for today. So again, I would like to invite you to like this video and share to your friends and subscribe on our channel if you are learning from our lesson for today. Alright, so again, having a proper risk to reward ratio will give you a profitable trading result in the long term, right? Because again, let's just say that you are taking 100 trades per year. while risking 1% and aiming for a 2% return. So again, you just need right here a 35% win rate for you to be a break-even trader. All right. So that means you only need to win 35 trades out of your 100 trades just to be break-even. So imagine if you have a 45% win rate while having a 1:2 risk to reward ratio, then that will result, or that will give you a positive result from your portfolio, right? So the problem is most newbie traders are not calculating their risk to reward ratio, and the solution to that is to always use a fixed risk to reward ratio. So again, whenever you are risking 1%, stick to a fixed risk to reward ratio, just like what we studied earlier, like 1:2 or 1:3, or simply put 1:1. Okay? And also you can also practice trailing your stop loss. So trailing your stop loss is a very, very good strategy based on my own experience. So imagine you have your open position here. Let's say you cut this pullback and you have your open position right here. So whenever your trade is going on your favor, let's say your stop loss is right below here, you can then adjust your stop loss to this one. Let's say you put your stop loss here while your winners, or while your winning trade is still open. Whenever the price is making a new low right here, then you can adjust your stop loss to this previous low right here. Alright, so this is the beauty of using a trailing stop. So let's say after opening your trade here, which is just a 1% risk, then the price, let's say that the price made a continuation up to this level before making a double top here and breaking this neckline. Then once you saw a pattern like this, which is a reversal pattern, then you can now take your profit around this level that can give you a 5% return. Alright, so in this case, by using your trailing stop, you can expect to win 5% on your single trade. Okay, so this is the beauty of using a fixed risk to reward ratio and using a trailing stop loss. Okay, so Isaac Bukola said this is nice. So I am glad to give you a value, to bring value to you. So please subscribe on our YouTube channel, and please like this video if I am able to bring value to you. Alright, so I want to end this fourth reason, which is a quote from Alexander Elder. He told us that it is essential to wait for trades with a good risk to reward ratio, and patience is a virtue for a trader. Right? Again, practicing a fixed risk to reward ratio will give us profitable trading on the long term. And also, we can choose to use our trailing stop for us to have a better return on the long run. Alright? And for our last reason on why most newbie traders are failing is because they are not trading with a trading plan. So, if you are trading without any trading plan, it is like going on a battle without a plan, right? Do you watch 300? Anyone here already saw the movie 300? Can you type 300 if you saw that movie? That movie is great, and we know that Leonidas, so that movie 300, we know that Leonidas, together with his men, or together with his soldiers, they are attacking their opponent with a proper strategy, right? Again, strategy is very, very essential in trading. So whenever they are attacking their opponent, let's say they are this one, or they are these soldiers right here. Bear with me, I'm not that good in drawing. So whenever they are attacking their opponents, let's say they have a sword. They have a sword right here. So a sword looks like this, right? All right. So they are not just hitting their opponent. So let's say their opponent is right here. They are not just hitting their opponent on a random basis. They have their proper strategy on when to attack and when to back up. Because as we all know, trading is just like going on a battle. We should know when to trade and when to avoid trading at all, right? Because for some reason, the the market tends to just make a sideways move like this, right? We can't expect for any market, whether we trade forex, we trade anything, any market out there, we can't expect to have a consistent uptrend or a consistent downtrend on a daily basis. Sometimes there's just a sideways move, or the price is just consolidating, right? So whenever you saw that the price is just consolidating just like this one, then this is a setup, or this is a trade, or this is a sample trade on where we should back up from our trade. But whenever there's a good uptrend right here and a good downtrend right here, then this is where we should be aggressive to put our trades, or this is uh, the the perfect timing for us to take a trade, right? So just like in a 300 movie, they they have their right strategy on when to attack and when not to attack. All right, they also have their exit plan whenever they experience losing. Leonidas are telling his soldiers to uh, back up for now, and then we will attack again later or tomorrow or the next week whenever we have the opportunity to attack, right? So in trading, we should have a trading plan just like that. Okay, so it is also like a sniper. So let's say you are a sniper and then you have a gun. Let's say uh, you are poaching a lion. So I don't know how to draw a lion. Just let's just put lion here. So let's say you are poaching a lion. So you want the least you should do is to just put a random noise, right? Or put a random uh, attack on the lion, because that the lions has a tendency to be scared, to be afraid, and they will run, right? They will run from anywhere, and you won't catch them. But if you have a proper strategy on when to attack, let's say you will only attack a lion if he is alone. Let's say the lion right here is alone, then that's the perfect timing for you to aim for that lion, because that lion is alone, and that means that he has no companion, and you can go after him if you hit it, right? So imagine if you are trading without a plan like this, then you will most likely lose your every single trade, right? So I want to end this fifth reason on this simple strategy, which is what I called a CEST. Okay? So what's the meaning of this? C stands for condition. So condition means that, let's say we want to see that the market is doing an uptrend or the market is doing a downtrend. So whenever the price is on a consolidation like this one, this is the kind of market or the type of structure that I will avoid at all costs. But whenever the price is on an uptrend or whenever the price is on a downtrend, then this is the perfect opportunity for me to take a trade. Right? So that's the condition. We must wait for the market to make a trend before entering a trade. And then the E stands for entry. Then for entry, we should have a proper trading strategy or a proper trading plan where we should only wait for a pullback from the previous resistance to become a support, or from a breakout, let's say a breakout from this trend line, before entering a trade. The most or the least that we want to do is to enter a trade blindly. So we should wait for a proper trading condition, which is an uptrend or a downtrend, and then once the price pulled back from its support, or once the price broke its previous high right here, then that's the perfect timing for me or for us to enter that trade, that long trade. For a downtrend, we should wait for a pullback from this previous support to become a resistance before taking the short sell entry. Alright, and the S stands for stop loss. And the T stands for target. Alright, so stop loss and target is the one that we are talking earlier, which is the risk to reward ratio. So whenever you are putting a stop loss, just put 1% per trade, and whenever you are aiming for your target, then you can put at least 1:1 risk to reward ratio, or something like 2% for your reward and only 1% for your return. Alright, so not having a trading plan is the most common reasons on why most newbie traders are failing, and we must avoid it at all costs. Okay, and the solution for this one is to do not trade blindly. So whenever you trade, just look for a setup like an uptrend or a downtrend, and then if there's no clear setup, then do not trade if there's no clear setup, like a sideways, or if the price is doing such a move like this. Alright, but whenever we saw an uptrend or a downtrend, or simply if there's a trend, or simply if a trend is present, then that's the perfect timing for us to apply the CEST. Alright, and the third one is to stay disciplined. Whenever you are trading pullback, just stay committed with that strategy and do not over trade. Do not commit the trading, the one that we talked about earlier, which is hopping from strategy to strategy. Stay disciplined and stay committed on your strategy. All right. And I want also to tell you that the simpler strategy, the better for you to apply it. Right? So just trade with your strategy. Do not trade blindly, and do not trade if there's no clear setup, and stay disciplined. And again, just always remember, the simpler strategy, the better. Because if you are trading with a lot of indicators like an MA, an RSI, a MACD, a stochastic, then it will lead you to analysis paralysis, right? If you want to trade with the RSI, then you can trade with it. If you want to trade with MA, you can trade with it. But do not mix a lot of indicators because it will lead you to analysis paralysis. So in my case, I'm only using support and resistance. So stay tuned on our YouTube channel, because we are teaching our viewers or our followers on how to trade and how to apply it on their own trading. So for our last solution is to manage your losses, and your wins will take care of itself. And right here, Alexander Elder told us that the goal of a successful trader is to make the best trades, and money is secondary. So just think about it. It's something like, whenever you are trading, just trade the pullback. And if you did the right thing, if you trade this pullback, and once you saw that the price hit your target, then that means it is just a result of you trading your plan, right? But if you are trading blindly, whenever the price is on an uptrend, you are just trading long, or you are just buying whenever the price is is on an uptrend, then that means you are trading blindly, and it will cost you a lot of money, right? So again, the goal of a successful trader is to make the best trades, and money will be a result of it, and money is secondary, right? Again, so the solution is to do not trade blindly, apply the CEST, and do not trade if there's no clear setup. Stay disciplined and manage your losses, because your wins will take care of themselves. Alright, so anyone here, please type on our comment section the CEST. Alright, so to summarize, our lesson for today, we can see here that the system, or our trading system, is only 10% of our success, because we all know that the market is random, right? We can't always win. We know that. We already talked about that. We can expect to lose 3 straight, 4 straight, 5 straight in a row. That's why we need to we need to manage our risk. We're only risking 1% of our account is a very good strategy, right? So system, or our trading strategy, will give us a 10% success, and position size will give us a 30% success. But most importantly is our trading psychology, which will give us a 60% of our success, right? So what I am trying to say here is, you should manage your expectation. You should manage yourself whenever you feel like you want to take revenge on a single trade. Just stay disciplined, stay humble, because or the market will make you humble if you treat it uh, without any respect. So I want to leave you with this quote, where it says that, take care about how you think, because your thoughts run your life. Okay, so this is not just can't be just applied on trading. You can apply this in any area of your life, right? Just take care of your thoughts, because your thoughts run your life. So just like in trading, we should put a risk on our every single trade. We should practice our risk management. We should always stick to our trading plan. Whenever there's no trading setup, we should just back up, just like how Leonidas is doing it from his soldiers. And then we must respect the market, because the market will give us that respect back to us. All right, so that's our lesson for today. I hope I was able to bring value to you. And having said that, we can now have our Q&A session. All right, so anyone here who wants to ask some question? So shout out to Mark Junicio, Cian Gaming, Angelo Gabisan, Oladel Bello, Isaac Bucola, Ekponudim Eudofia. I'm sorry if I wasn't able to pronounce your name properly. And shout out as well to Mark Santiago. Hopefully I was able to bring value to you guys. So anyone here wants to ask some question before we end our lesson for today? So Angelo Gabisan asks, what lot size will you use for $50? So if you have a $50 account, so for every $50, your risk should be 1%, right? And 1% of $50 will be 5 cents, right? If I'm not mistaken. 5 cents, it will be 5 cents, right? So if you want to risk just 1% of your account, you can use the MyFX book calculator. So let me show you it. Let me show you the MyFX book calculator. So here for the MyFX book calculator, you can put your account size here, and you can also put the specific percentage you want for a single trade. So let's just say you want to just risk 1% of your account while having $50 on your account size. So here, let's just say you are trading euro dollar and your account size is $50 and you want to risk 1%. You can put it right here. You can put it right here. Here, first, you can put how much you got right here on your account size, and you can put your risk right here on the next text box. So you can put 1% right here, and then let's say for example you have a 10 pip stop loss. Once you press calculate, it will give you the lot size for that specific trade. Okay, so I hope I am able to answer your question. And next one here for Norman Saga, he asks what specific time frame you are monitoring for your entry. So based on my experience, I am trading on the 1 hour time frame. Okay, for 1 hour time frame, I am looking for a setup where if there's an uptrend, I am looking for a pullback on previous resistance that may turn into support. Then once I saw it on the 1 hour time frame, I am jumping to the 15-minute time frame to look for a possible entry. Right? So this pullback right here on a 1 hour time frame is a very good entry for us here at the 15-minute time frame. So I want to teach you this one. So whenever you are trading on the 1 hour time frame, your entry could be at the 15-minute time frame. And then if you are trading on the 4 hour time frame, your entry could be at the 1 hour time frame. All right, can you see the pattern? The analysis should be done on a higher time frame, and the entry should be put on a lower time frame. So if you are trading on the daily time frame, then your entry should be on the 4 hour time frame. All right, so this is what we call a multi-time frame analysis. All right. So here, Ostino Entertainment asks, where am I supposed to put my stop loss when trading with support and resistance strategy? So the most basic thing is to, let's say you bought here at the support. So once you bought here at the support level, your stop loss should be put at around here, this level. So whenever you saw that the market is doing something like this, you can put a range into your previous high to your previous low, and then you can pick the 50% of this range. Then you can put your stop loss from this 50% range. Okay, so let's say this previous support or this previous resistance turned into support. So once you bought here, you can now put your stop loss at the 50% range, which is right around here. Okay? You're welcome, Norman Saga. Hopefully, I was able to answer your question clearly. Alright, so for stop loss, again, you can put it right around here from the 50% range from this previous high and the previous low. Alright? So any question? Alright, so I would like to invite you again to stay tuned and please like this video if I was able to bring value to you, and don't forget to subscribe on our YouTube channel. And stay tuned because there's a next webinar after this webinar. There's a next webinar for you. All right, so you're welcome, Ostino Entertainment. So, any question before I end? A shout out to Mark Junicio. All right, so again, please put on the comment section the word CEST. All right, so before I forgot, I also want to tell you that below on this below this video, there's a link on the description where you can put your feedback. If I was able to bring value to you, you can put your feedback. There's a link on the description below. All right, so shout out to Mark Junicio, Angelo Gabisan, Ostino Entertainment, I'm sorry, and Norman Saga. All right, so I think we can end right now. All right, so if there's no any question, we can end our session right now. Or are there anyone here to ask some question? Last question. All right, so if you don't have any question, I would like to thank you again for tuning in on our webinar today. So if I am able to bring value to you, please don't forget to like this video, subscribe to our YouTube channel, and you can also share this video to your friends. All right, so once again, this is Paul Mendoza, your